Thanks for tuning in to Look at My JPEG, the podcast that discusses NFT, DeFi, and NFT financialization. This is your host, Xerox Jose, the founder of NFT Perp. The reason why I want to do this podcast is because there's just not enough people talking about NFT financializations. In this podcast, you can expect us to invite guests that are builders, founders, even investors that are deep in the NFT financialization space. We'll discuss their story, what they're building, and how you can get involved. So thanks for tuning in. Welcome to episode 12. In this episode, we have David Choi from MetaStreet. MetaStreet is a decentralized interest rate protocol specifically for the Metaverse. They offer different products, including vaults that allow you to deposit crypto and earn yield from diversified portfolios such as NFT-backed loans and promissory notes. PowerSweep is another product that it recently launched that allows users to buy and sell NFTs, using margin and never face liquidation using their promissory note infrastructure. It's a very interesting conversation throughout, and we hope you enjoy it as much as I did. Thank you. Hey, everyone, thanks for tuning in to the 12th episode of Look at My JPEG. And today we have David from MetaStreet. Welcome, David.
Hey, thank you for having me. How are you doing?
Yeah. Doing great. Tuesday, we're close to launch private beta in 3 days, and we're pretty excited. But with all this chaos going on, we still want to make sure we're reaching out to our partners and making sure we're getting new speakers and guests on the pod. And this is an exciting one. I've been wanting to get you guys on the podcast for a couple of months now. So glad we're able to connect in London a couple of weeks ago. And now having a chance to speak, and hopefully this could be a pretty good content for us for the Spotify podcast later on. So thanks for coming on. For those that don't know, MetaStreet is one of the OGs, I would say, in the NFT finance space. They focus on problem solving for lenders and borrowers in the space, specifically for lenders on risk management. But David, before we hop into MetaStreet, why don't you give us a quick intro of yourself, how you got into crypto, what you're doing before that, and we'll take it from there.
Yeah, I guess I can start my background from all the way back to college. I actually studied art history and finance. Those were my two focuses. Can you hear me now?
Yeah, I can hear you fine.
Sorry, yeah,
You're being okay.
turning off my alarm. Yeah, I started kind of off college. My first job was doing art lending, so it was like collateralizing artworks like Warhols, Frank Stella's, Robert Indiana's, and then providing loans against those assets. And that was an okay job, but it was kind of introduction to esoteric asset lending. And right after that, I did investment banking at Deutsche Bank for the real estate, gaming, lodging, and leisure group. So casinos, shopping malls, and stuff like that. Which I guess were also somewhat unique. And they wouldn't let me trade anything. That's actually how I got into crypto originally, because they wouldn't let me trade equities, debt, or commodities. Triple level commodities. They were like, this is a little too iffy. And I'm like, there's no such thing as instead of trading for commodities, but they still wouldn't let me. And yeah, they didn't know what Bitcoin or ETH was back in 2016. And I kind of got into the space, gas. It was like proto MEV, like gas bombing to get into ICOs, and then eventually Uniswap sniping, which was more real MEV, and then also just being an angel investor in the space for a while. So I personally invested in a lot of projects over the years, and kind of took a step back and realized I kind of want to join the building side after a few years, after 5-6 years of like the shit coining. And I noticed back in like November 2021 that there was so little lending volume for how much trading volume there was. It was like 10-15 mil of lending volume to 55 billion of trading volume, which didn't make any sense. And we knew we had to scale this in kind of a fast underwriting way. And that's kind of what Ribbon has done for options. And that's what we wanted to recreate. We are seeing now the saturation in the industry where the lending volume to trading volume has kind of reached their penetration rates that are more comparable to the art world. And the art world is 10 to 30% penetration because naturally you can't get that much LTV for each artwork. So the penetration there is like 10 to 30%. And now you're seeing what was once 0.01% penetration to now closer to 8 to 10% in the NFT lending space. It's like 15 mil of lending volume on NFTs to 500 mil on OpenSea, which is a decent comparison. So that's it's getting a little more saturated to market expectations. So one of our bigger questions is how do we increase LTV going forward? Our V1 kind of created these vaults that allow you to algorithmically underwrite each individual asset, but still permission top down, much like Aave or Compound. And we realized that there's natural limitations in the mechanisms here. And our V1 was pretty decent. I mean, we've done like a total of 50 mil of volume for like 300 mil of volume ever done on NFT lending. So we are the largest providers of capital on NFTFi and Arcade and these other platforms. But our next step is kind of evolving towards capital efficiency, permissionlessness, and also oraclelessness, which I think you're seeing a big divergent path of people who want to take that approach. You're seeing people who want to become a little more oracle based, and they kind of don't really view that as an issue down the road, which is totally fair. I think a lot of assets can survive on oracle based lending solutions. You just saw like a back come out with their pretty awesome paper on paper, and a few other platforms kind of depending on that. We want to go the other divergent route, which is far more focused on oraclelessness for our next feature. And yeah, we can dive into that in a bit. But nevertheless, yeah, that's kind of MetaStreet story. And we've we have a big knack for experimentation. So we don't want to we really don't want to recreate existing parameters that DeFi is set up. I'm a big believer that NFTs are not money markets. A lot of people call it that, and I think that just ignoring the very fundamental definition of what money is in that phrase. I just think it sounds cool.
Okay. Yeah. A lot to unpack here. I want to take a step back and just kind of dive into your history a little bit. You mentioned you were also, before got into crypto, in the art space, and that has to do with lending. Can you shed some light for the listeners that are listening? Like, what does traditional art lending typically look like? Like in crypto, I think right now, by now, we kind of all understand, okay, I have an NFT, I put this up as a collateral using a smart contract, and I can borrow money from a lending pool or a direct counterparty. What does that look like for a traditional finance or traditional art lending space? Give us a quick example.
Yeah, I mean, art lending gets very sophisticated to what people make it out to be. It's kind of a shitty business, to be frank. It's like non-cash flow generating, like very non-fungible assets, which is also like NFT lending, but far more focus on legal parameters than there's anything else. I mean, you can just look at the historical volatility of any artist. Like the way you lend against artworks is usually twofold. You can either lend as it's more structural than it is actually about the individual assets. You can lend through like a private bank, which is usually collateralizing your other assets. So it's much like if you have all your stock portfolio with this like private bank like UBS, then of course it'll give you 2% interest rate on an art loan. Like that's a relationship business, just private wealth management. And then the non-recourse lending, which is a far more better comparison, is the one where it's just individually solo the art and not a client of your bank. That is private art lending. That's like closer to 8%. And that's kind of very I guess dirty is the right word because it really focuses on like suing and like all these other contingencies, damages to the art during the borrow, different mechanisms to get around it. You could do like a cash-based lending structure where you do like a sale leaseback, and you pay back the lease, which qualifies for tax benefits. It's very normal in real estate, and that's pretty much an option which you can use to price to underline your asset using some Monte Carlo simulations, stuff like that. Which it's an okay business. I mean, you can add as much flair as you want on top of it, but the fundamental structure of lending against artworks, which depends on tax benefits, is not a very fast growing business, which is why I think there's natural limitations. There's been like some initiatives on the tech ops side, like Masterworks and stuff like that, but I mean that's really
Mhm.
bottom feeder kind of like artwork. Like I wouldn't want to own any of those assets. They're usually it's much like getting the yield on Yield Street. You're getting the shittiest assets. So I think the structure of the art lending world is well primitive, and I think the crowd that it brings in isn't very tech forward either. Which is why I'm a little
Right.
more hopeful about how NFTs might change at a fundamental level as cash flow generating assets. But
Yeah.
yeah, it's an okay industry. I've applied more of my knowledge from DB for this company than the art lending world. The art lending world just taught me that it's a it's a very well simple business.
Do you feel that what we're currently like, as some of the listeners right now are actually building an NFT finance space, and do you feel that what we're building here could solve a lot of the industry problems that you used to work in?
No, because it's far more about legal. So legal guardrails.
Mm-hmm.
If I mean, people can try to do the let's put this up, let's lock this up in some locker, and then try to tokenize that asset. But that's an Oracle problem,
Right.
and I'm very bearish if anybody tries to push any narrative about bridging the real world to the digital world. I'm bearish that concept for the next 10 years. Um, I think that's a
Mm-hmm.
marginal benefit. And also like meat space yield, as I mentioned before, like yield street, like you're not getting the good yields. You're getting the shitty yields. Like credit funds are getting 20% for like equipment financing, and you're not because they just been in an industry. So it's an origination problem. So I'm not that bullish on solving real world problems. I think we should solve crypto unique problems for crypto unique um, metaverse yields instead of meat space yields. Um,
Yeah, that's an interesting idea. Like, I feel like it would be cool to have like a debate roundtable inviting you and a bunch of other different NFT finance and think people that think this is more applicable for real world assets,
yeah, I'm.
for NFT lending and borrowing.
I'm I'm just so against it. I've been in this space for so long, and people have pitched this idea so many times, and it just doesn't make any sense to me because it's like crypto is always a solution for like it's the last thing available, right? It's the best example I would
Mm-hmm.
go to is like Centrifuge and Maple. Like I was a big fan of Centrifuge for a long time because they're it's a strong team. Like they had everything going for them, the legal structure, the tech, but the the final buyer of their platform, which people always forget because they get lost in this like mechanism designs and shit, is like it was shitty yield from like traditional spaces, like trade finance, like a horrible form of yield. Um, that
Mm-hmm.
was even like Goldfinch, like it's definitely like a I want to say about Africa White Knight thing, but it's Africa fintech middleman. Maple was able to grow far more than a lot of these guys at a hyperscale with like much lower raise because they serviced crypto native businesses that couldn't get a loan anywhere else. And that as a
Mm-hmm.
it's not just a 10x, it's like a million x because it's a binary problem. It's like yes, I can't get yield, I can't get a borrow anywhere else, so here is the only solution.
Right.
So that's why I don't like to see a 0.25x improvement on traditional world traditional systems being solved on chain problems, which is like some small liquidity. You might as well just do pink sheets at that point. So
Mm-hmm.
I don't know. It's
So, in other ways to phrase it, like your bull case for anything sort of on chain, if you want to call it money market or not, is we're solving new problems in a new world
yep.
in a new environment, as opposed to trying to tap into the physical world
Yeah.
and disrupt different systems.
Yeah, and I mean, you just try go if you're ever doing real world assets, just go to like a normal conference and try originating your loans. They'll just look at you and be like, "What the fuck is this kid saying?" I've been there. Like it was a dark time before pre DeFi, where you're trying to like offer these like hyperledger bullshit like IBM solutions that were like blockchain, not Bitcoin, all that stuff, and it doesn't feel good.
Hmm.
And it's also just like people are more willing to take risks in the space. Like it's when you're in software, it's easy to sell to software companies because they get it. So trying to do this like physical to just it's a big cognitive dissonance. And yeah, that's my general opinion on it.
Got it.
And that's why I think for NFT specifically, we're at a very early arts and collectible like phase. Well, I think a lot of people here are built like a lot of people here said like, oh, the features in like real world assets. I'm like, no, the features in like more interesting NFTs. The features in like NFTs that function in a broader economy, and especially for the people here, because then underwriting becomes extremely easy. Like it's the reason why underwriting is so hard is because we're trying to underwrite art, and that is silly. That's an attention based like valuation system, which is very um, which depends on market structures. Then it depends on actual demand. Like the squiggle DAOs are now forming, and these supporters and patrons, which is how the art world actually supports its own artwork. You have irrevocable bids that support the auction price and have limited public market sales, and that's what controls the price. And as you get cash flow generating assets, that's when it gets really obvious what the valuations, or at least the fundamental value, um, and all that stuff. So I'm quite
Yeah.
excited for the expansion of the taxonomy behind NFTs, rather than the introduction of new kinds of assets, like or
Hmm. Hmm.
of existing forms.
Gotcha. Let's also talk a little bit about MetaStreet for those that maybe have been living under the rock, don't haven't come across MetaStreet before, haven't fully understood the mechanics behind it. What is MetaStreet V1? Give us a explain it like I'm five example.
It's just a vault for making P2P a little more digestible. So the current issue is that it's very hard to understand what the market clearing rate is. If you go on NFTFi or Arcade, you're trying to, um, well, you might not have enough capital or skills or the labor to go through this process of giving out loans effectively, because what you have to put on LTV, duration, and interest rate, stuff like that. It's a lot of variables, and to do that, it requires a very specialized skill set. And you have to look at the historical volatility, which we calculate through peak to trough. So it just simplifies P2P to make it closer to P2Pool, where you can just deposit into a pool and that allocates capital for you. This was a very good strategy early on. Like our strategy maxed out with really four quadrant system, where we have on the bottom left low LTV, low interest rate. That was a very attractive option when punks were 500K, because if you want a 20% loan on a 500K asset, then yeah, 100K is still a lot of money just functionally, and they wouldn't mind like a 5 to 10% interest rate. So we're like 90% of NFT of CryptoPunk lending volume because that was a priority. And for a while, that was like our main value generator. Um, but then the positive carry trade kind of disappeared, where you would borrow at a low interest rate, like, hey, your CryptoPunk got borrow like 10%, and you would put in like high like stablecoin yields, which Terra kind of supported the ecosystem, whether it was through Terra directly or indirectly. People were competing to get that 20%. Um, and a lot of our institutional borrowers were doing this trade. And like this guy has 200 CryptoPunks, one of our friends, and he would borrow against most of them to deposit into a stablecoin yield farm, and you get free money. That's positive carry, and that
Right.
and then the Terra collapsed, right, and then the
Whoops.
yeah, the cost of equity, or the generation of that value in the ecosystem collapsed. So people stopped being interested in borrowing right after Terra. It collapsed for not just NFT lending, it collapsed for every single industry, because there was no
Hmm.
forms of risk taking that made sense. And now, so ETH-based lending became more interesting instead of DAI-based lending because the LTVs were now just unsustainable. And also in the market, you were looking at people weren't viewing lending as lending; they were viewing it as put options. So you would collateralize your loan in order to hedge against the market. And that was a far larger interest than it was for interest rate games, which was our original focus.
Mm.
It was really focusing on market clearing interest rates. And now we're looking at where the maximum borrow can reach, and where our product can go from there. So our early generation worked for a little while, but we're now we're realizing like we should experiment a bit more to become, instead of our algorithmic like safer lending solution, it should be what is the public market's max LTV solution, which is max risk, that they're willing to take.
Mm-hmm. That's really interesting. So it sounds like you're okay. So I just want to like unpack this real quick. So, what MetaStreet has effectively done, is with your beginning strategy is you are effectively decentralizing and making initiation of loans on these high ticket items to become more accessible for users because maybe they don't have 100K laying around, and you're allowing more people to come in and essentially bundle money together and initiate or take on origination of notes on these PDP loans. So therefore get access to yield a little easier. And for the borrower side, because there was a stablecoin yields, it made a lot of sense for them to, instead of having idled NFTs, they can go into different strategies and earn free money, basically. But as we move forward, go ahead.
Yeah, so that's a big word that I forgot to mention is the promissory note. I guess the real function of this platform is it's not enough. It's that it prices the promissory note. That's what a lot of people don't realize. Like, what does MetaStreet do at a functional level? Well, we price the debt, which might confuse some people. We're not pricing the NFT. We have no intentions to. I think that doesn't make any sense, really. Like to price the Oracle price of an NFT. Pricing the debt is far easier to do, because the debt has cash flows, right? The debt has like specific yield that they expect to have. Of course, you have to deal with like the volatility of the underlying asset, but what MetaStreet does is it prices the promissory note, and really nobody else really does that. They're not really calculating like, hey, how much is this debt worth? And we're creating the secondary markets behind NFT lending, and for a while. I mean, now it's now we're effectively pricing put options because people aren't calculating debt; they're calculating the risk.
Yeah.
But at the very least, that is the function of what we do. Because we can price it, we can buy it, and that's the function of what the platform is. If you go on a platform right now, MetaStreet.xyz, our first page is to, on the first page of the law at least, is to price the promissory note, and then you can buy it right after, and then
Right.
or sell it.
Tell us a little bit about pricing a promissory note. Like, is that just the debt that note carries? How else do you price it? Do you also calculate the premiums on top of it?
Yeah.
What is a typical
So
rate that you accept?
we're looking at the lowest cost of value for the promissory note, which is, I mean, this is like the very simple like time value of money calc, which is like what is the asset underlying asset worth, what is discount you apply, and then depending on the flow, which is why like Coinbase bonds aren't worth $1, right? They're worth 58 cents to the dollar or whatever it is today. Because there's a discount to the value they expected to get on the risk of the payout. So it's taking three variables really. We're reinventing this discount rate, a weighted average cost of capital, as they call it in finance, or WACC, which is inputting three variables: the duration, effectively in term, the interest rate, and the utilization. And those are the same three terms that you input into your loan request for on NFT-Fi, because of your fixed term, fixed duration. And we take all those variables together. We kind of put them through each NFT has its own like algorithm, and that spits out a single number, and it's very predictable. And that's usually based on no different from like this Aave style, like, hey, let's kind of underwrite a specific NFT and determine like, hey, this is what the maximum borrow is, which is why you can get like 80 or 90% on ETH, but you can only get like 50% on Chainlink or something, because of the liquidity and stuff like that, which we're doing similar functions for.
Okay, so we cut a lot here. I want to take a sharp turn and maybe touch on, besides the strategy, you guys, like you mentioned early on, you kind of shifted towards like maximum risk and LTV, being an option writer almost. Tell us a little bit more about the new protocol you guys pushed out, like
Yeah,
new product feature,
totally.
the PowerSweep, and we'll talk about this for a couple minutes, and we can also segue into the V2 of MetaStreet.
Yeah, that was like a 1.5. So we have like a TikTok solution, in terms of not solution, but it's strategy where we're focusing on the lender side and the borrower side, and the lender side and the borrower side. It's like kind of what Intel does. But we've kind of developed this lender side function a bit, and we wanted to improve the borrower function, mostly because the competition on NFT-Fi was just getting a little intense, right? We didn't want to be super risk on, especially with our DAO capital. It just didn't make any sense to give out ETH-based loans when ETH is crashing, also at very high risk rates. So um, what we wanted to do is like kind of develop our own origination platform with a captive use case for the loan, right? So most people aren't actually borrowing for real functions, which is why borrowing rates have decreased, is because when they actually, it'll be easier to use the loan immediately when you borrow, and that's why buying with leverage is interesting. We really didn't like buy now pay later, into these new initiatives, because you can't realize the gain. They still require you to installment payments, stuff like that, which didn't make any sense to us. I think installment payments are just like very bad UX in crypto, because if you miss one, then you lose everything. There's no like penalty or something. Um, so we wanted to introduce this primary function of selling the collateral during the borrow. So you can buy something with leverage, and then after 30 days, you can either refresh the loan. You can do infinite rollovers, right? You can also sell the underlying asset to realize a profit. So you buy CryptoPunk, it's worth 100 ETH. You take 50 ETH loan to buy it, and then you sell it for 110. Well, you just made 10 ETH in profit, because you can list it during the borrow.
Yeah.
Yeah, you can do this with sweeps. We did a few trades ourselves with Meebits, which ended up making money, with only like far less capital than what we originally had. Um, the issue now though is you're seeing the market kind of drop off in terms of a power. Like nobody's buying, because you're actually seeing on OpenSea more people taking bids than they are taking offers. You're seeing development of the bid ask spread, which is the floor, but then the offers you're trying. It's actually I gotta reword that. It's not bid ask. It's offer floor. Sorry, that's how they say it here. But
Right.
people are now taking offers, instead of waiting for them to take. Sorry, they're taking bids, and they're not taking offers. So they're not crossing the spread. So our next product is not to have leverage sweeps, which is what you can do right now. We're trying to introduce leverage bids, because more people are interested in providing. Um, uh, we're seeing a user behavior change of not necessarily apes and sweepers, which you might see in the very early instances of like a new mint. For developed collections, you're only seeing people taking the bid, including the CryptoPunks marketplace, where they're crossing down, which means that you need leverage bids, not leverage sweeps. If that makes sense. I'm not sure.
So, okay.
Yeah.
What is a leveraged bid? Can you walk us through?
Yeah, it's just like it's listed for
who?
yeah, it's listed for 100. You put an offer for, but you put a bid for 90, and the guy says, "Yeah, I'll take 90." Um, so
And that 90, maybe you actually personally, as a borrower, you own only 30% of it, and the rest 60 comes from the lenders of MetaStreet.
exactly. So we're allowing like lower cost of ownership and lower cost of capital, because it's expensive to buy everything with cash. But yeah, that's behavior change you're seeing. You're actually seeing for the first time, we based acquisitions is now is now more than ETH-based acquisitions, which means that you can only do ETH for bids and then ETH for direct buys, um, which is you just buy it now, and that's a behavioral change, which means that
Mm-hmm.
the people who are playing the NFT game are no longer waiting for that value appreciation. They're actually doing these very short term holds, like 1 to 3 day trades and flips, which is a scalping behavior.
Right.
And those people don't
Mm-hmm.
want to cross every time. They don't want to buy at whatever the seller's willing to sell it at. They're willing to buy at their own terms, which means that their
Right.
holding behavior is only 1 to 3 days. So creating a product that services 1 to 3 day based loans is kind of our next product feature push. So our goal is to offer like 70 to 90-day% LTV loans. So for an acquisition, we'll give you 80 ETH to buy your CryptoPunk, which is unavailable to most peer pool solutions. But the consequence is that you can only have this loan for 1 to 3 days. You can roll it over every 1 to 3 days, but you have to understand that it's not something we can hold on our balance sheet for a long period of time. So that's an advancement.
So,
Go for it.
tell us a little bit about the premiums on these sort of borrowing, and also, is there liquidations?
There are no liquidations. That's one big feature. Is we don't have an oracle to depend on for liquidations. It just expires. It's almost like a put option, as I was saying, but the duration is shorter. If you have these three variables, you're really creating this like a very narrow, very narrow triangle of the three variables, where it's really short duration and really long LTV as one
Mm-hmm.
solution. But yeah, no liquidations. It's all default based, so just make sure to pay on time or roll over in time. It's a very straightforward feature.
Yeah.
Um, uh,
Got it.
but yeah, it's definitely an experiment. We are at a time where you're not really seeing growth in the industry, so you have to push products that might enable that. Um,
Absolutely.
yeah, much like yourself.
Yes, we can touch on that later on for sure. Great. Thank you for covering that. I think we have a pretty good idea of what V1 and the PowerSweep, or I guess powered bids you guys are working on, look like. Tell us a little bit more about. So, to give some context, David invited me to the MEV, which Metaverse Economic Forum, held in London. There was the first event for MetaStreet. And at the end of the conference, Connor from MetaStreet made a presentation about the V2 of MetaStreet, which is quite exciting. Can you give us a very easy to understand example of what V2 looks like? What are the problems you guys saw with your time spent on V1, and what drove you to developing V2, and what does V2 solve in this ecosystem?
Yeah, the main focus is to progress toward Oracle-lessness as a primary feature. Like permissionlessness is something that I am very passionate about, mostly because if anybody here has ever played games, even in one game, you have no idea what the items are. Like if you're playing Tarkov, good fucking luck trying to remember every single item and trying to understand each market what the price is. It's just not going to happen. And I imagine that for every single game out there. And our mission has always been to like expand the GDP of not just one metaverse, but every metaverse out there. So how do we enable that? Where it's not going to be done through top-down underwriting, where I just say like, "Hey, this is worth that much," and I can let them about that much. That's the market today, where you're seeing like the board of yachts. But if I want to enable true permissionless bottom-up lending, that's going to be enabled through um, permissionlessness. Anybody can create a debt market for anything. And you have to universalize three pillars, which is credit, trust, and ownership, because the communities today aren't really companies. They're not communities. The communities that was being created in the metaverses, they're more like nations. And to expand the prosperity of any nation, you have to create a debt market. That's how every single kind of strong economy grows from London to New York. So our product really focuses on permissionlessness and oraclelessness, as well as capital efficiency, as the three pillars to kind of push um, our next product design. So this indexing problem, I call it, it's we have to create kind of like a Dewey Decimal System for all the NFTs that will be created in the future, and we have to create debt markets for each one. And that is a little bit of a hard problem to solve. P2P kind of solves this already. Anybody can create a lending market on P2P for any market out there, but it's just not very capital efficient. Interest rates are very hard to determine. What is the rate that you accept? It's just kind of hard to do. So we wanted to develop almost like a Uniswap V3 for NFT lending, where anybody can. And the key word for Uniswap V3 is concentrated liquidity. If anybody puts an offer out, like what is their percentage? How do you pool the capital together to get to a single loan? So that's kind of where we're developing, and the primary feature that we're experimenting with is developing from our V1, which originally had two tranches, junior and senior. But the idea where you like cap out a rate and then you divide it up, aka tranching, that's a very TradFi idea. What we want to invent is closer to like, I like to say infinite tranching, where you can have infinite amount of tranches, and every loan offer that exists is a tranche. And that's kind of the aha moment we had. So you can create, if there is for example, so let's say a sword inside the Cyberconk's game, right? How do you create a lending market for it? Well, you would just say like, I'm willing to lend this much for this much capital, and you have 100 of these, and every single one will be pulled to a certain degree, depending on its position. Your interest rate will be determined, and your the amount of capital that's being withdrawn from each is also being determined. And this allows concentrated liquidity for the highest LTV for which leverages lower pool tiers to pull a single number, which is going to be your borrow rate. It's a pretty complicated description, but at the very least, it is, instead of a ribbon for NFT lending, it's more like Uniswap for NFT lending, which is kind of the evolution from V1 to V2.
That's quite interesting. I think I've seen a couple of different tranching models out there already for NFT lending and borrowing. And you guys will be another iteration of this, which I think is quite interesting because, like you mentioned, typically you have a trified model where you have a senior tranche and junior tranche.
Yeah.
But as you mentioned, you have infinite tranche, which kind of just means like you kind of have, is there a bonding curve with this? Like, how do you guys price?
Yeah. So the pricing is determined by the limits that people set, right? It's like, hey, if it's a sword, I'm going to give 100 ETH for this. I'll land up to 100 ETH. Let's say it's worth 200, and they're willing to give 100. But somebody's a lot more safer. They're like, I don't know if it's ever going to stay at 130 days out. I'm going to do like, 25 ETH or something. And those are actually, that's actually creating like a distribution curve of risk. And that actually helps determine the interest rate distribution and utilization.
Right.
The biggest,
so does that mean if you are a lender and you're putting your money on a higher tranche, which means like higher risk in terms of closer to the LTV, and when you have a form of default, you essentially get slashed more, and therefore your interest rate in return should get more.
Exactly. And the biggest thing is that there is no price when you're lending to these assets, because the people that already put down their numbers, they're putting the price down. It's obviously a granular price. It's not going to be whatever the highest number is. It's going to be whatever available capital, the distribution there is, and how much they're borrowing. But the most important thing is that this is not dependent on an oracle or a price, which is what most tranching depends on. Like if you're syndicating any form of real estate, MDS, whatever, you have to put a price, and then you have to start from the bottom up. You have to start with a senior tranche and develop upwards. We're saying don't start with a price. Don't start with the valuation, which is what most people do, and then from there they tranche it out. I say just forget the price and just create tranches from the bottom up, and truly create this oracleless, permissionless, but also extremely capital efficient lending solution. Because the Squiggle DAOs of the world, they'll be lending at 90%. You'll never beat them in without lending, because they are so bullish on underlying asset. They still want to leverage the capital of passive players who want some form of utilization, but also very safe forms of risk, with low exposure to default. So you're taking the benefits of all that and kind of combining it through this mechanism of design, which is this game of concentrated liquidity on Uniswap.
Got it. Thank you so much for covering all of that. I think this is quite exciting, and I can't wait to see it to go live. Or when are you guys launching a testnet or MVP for this?
Yeah, we I mean, I think the joke is 2 months. It's always a joke. But we're already doing the architecturing. There's a lot of on-chain issues, which we're dealing with in terms of the unfortunate realization that we're on a layer one. Like, man, I really want to build in a layer two, but there's just no NFTs there worth in this market at this time. Um, if we were on a layer two, we could have been launched in like a few weeks. But we are focusing on building the capital efficiency solutions. Gas efficiency solutions for layer one. So that's taking a little while longer. But yeah, I mean, about 1 to 2 months, we'll launch like a test net, which we're hoping to have some people experiment with. And if anybody's interested, we are going to have a 30-person battle between what is the best rate and the winner, depending on the volatility of random
Quite.
NFT. But yeah, that's kind of the expectation. We're focusing on the lending side right now over the next few months before we go back to the borrower side.
Got it. And I guess one thing I would love to get your thoughts on. What are your thoughts on composability? Like when it comes to designing this system, do you think about composability at all?
Yeah,
Like how do you envision this being used for other use cases?
this is already compatible. I mean, we've already built on top of existing NFT lending protocols, so this will plug in directly. I think there'll still be out there who will want to take 100% exposure of an NFT loan. So in a peer-to-peer solution, like there will be one guy who just wants to take wipe out the entire thing. And that could be us, or it could be them, and they could outcompete. Either they could play our game, or they can compete against the system, and that's totally fine. The goal is that the interest rates get lower. Like that is the ultimate goal. As we all know, low interest rate environments usually spur growth. It might have consequences later, but it's not a problem for us right now. But by having cheap debt, like you will have a lot more speculative activity and a lot more interesting um, market participants kind of come up and community spawn. So as long as whether it's P to pool, which I have some reservations on, or P to P, which I'm a fan of. Combining all those efforts and they all plug into our systems right now. You can actually in our V2, you still have liquidity routing to other platforms.
Yeah. Okay. I'm quite excited for this. And if you have me, I love to test out the product as well and be one of the 30 testers, or there's more. Awesome. Thank you so much for covering all these stuff. I guess like what's next for you guys at MetaStreet? What are you excited about? Where do you kind of see, and this is a pretty generic question, but like where do you see the space going in NFT finance? What are the things you're very specifically excited about in NFT finance?
Yeah. One of the things I think people are not expecting is its over-indexing like event. I think there will be so many fucking NFTs out there that you can't even comprehend. You're seeing so many derivatives come out of just like the Utes ecosystem, right? Or like Bored Ape Yachts, you're having all these mints. Like it's going to be impossible tracking all of these. Like you're seeing this Cambrian explosion, and I think a lot of people don't realize that this is going to be an issue, and how dirty it's going to be. like I'm not sure if that even the marketplaces are prepared for this over-indexing event. So I think creating systems that enable these kind of platforms to develop is um, uh, kind of one of the big key problems that people have understood. Fraud, I think, I don't think it's a big issue, to be honest. I think a lot of people invented its own problem where you can't find the spot price. But I think as things get over-indexed and over-complicated and like unmanageable, well, a lot of the systems that you see today won't be able to keep up with the times. So building for permissionless and not really, it's non-permission future is kind of the utmost task in terms of what you're developing towards, because there's just going to be NFTs. If you try to think of every single thing on your desk right now, every single thing is an NFT, right? Like it is every single asset that could possibly exist. You play any like RPG and pick up every in any looter shooter. Like how many assets are there right now? And how do you leverage those assets, and how do they become utilized beyond their specific silo? I do think that we are going to see very soon a activation event for NFTs as well, like with ICOs in 2017 evolving into DeFi, like 2 years later. Um, NFT DeFi is one of my least favorite phrases because it doesn't represent what's really going to happen, which is NFTs will have its own unique activation, and that's not historical like DeFi. It's going to be NFTs, and it will have its own kind of period where people will find different use cases beyond just DeFi primitives, which were made originally for money markets. So I am excited to see how the silos can be like disrupted between NFT projects, because right now you have to go to NFT projects to get adoption for your NFT activation protocol. So I don't know what the phrase is going to be called. I called it the Metaverse capital markets for my spiel, but of course that word may not stay. But that's kind of what we're developing towards. Like these are hard assets, and every asset the moment it's priced is a financial asset. Um, and that's kind of where I see the market develop. I think we will see a bear for a while, but that also brings about some interesting experiments.
Yeah, that's no question. David, thank you so much for taking the time to unpack all of these different products you guys are building and your vision and how you guys see the space moving forward. I really appreciate you taking the time to come on and chat. Before we hop off, how do people follow you? How do people follow MetaStreet? And how can we get involved?
Yeah. Well, there's two ways to engage MetaStreet right now. You can either sweep with leverage and also make a profit off leverage if you believe there's an event that will garner a profit. That's through PowerSweep. That's through our app. There's also a vault which generates yield. I think it generates like 20% right now on the junior tranche. So that's somewhat juicy. But we haven't done marketing.
Is that ETH or DAI?
Both. So
Both.
yeah, I think one vault's 100% utilized right now, but we haven't done much marketing on our side because we're still experimenting and we want to market once it's in its final form. And that's our current app right now. Secondly, you can follow me and MetaStreet right now for product updates to see what other things are developed. So it's available right now. You can also follow off MEF Digital, which is our event slash news outlet, which we're starting up. And we have in December after FTX and Thanksgiving, we're going to start a 12 days of 12 days of Thanksgiving, 12 days of NFT finance, because we have so many videos that we created and content that was generated, including 0x Jose here for a lot of the content that was generated, which really highlights the frontier that's being tested for NFTs and how to activate those assets. And a lot of interesting conversations and comments were made. So over the next month, we'll be dropping one video at a time, kind of like highlighting unique frontier that's being tested in the NFT finance front. So
awesome. For those that are listening, follow MetaStreet on Twitter. That is at MetaStreet, which METASTREEXYZ. You can follow MEF_digital on Twitter for what David mentioned. And David himself, you can follow him at KTKZERGS. Thank you everyone for tuning in to the 12th episode of Look at My JPEG. And I'm incredibly just happy that we had this conversation and a lot of it was uncovered. And I hope you guys enjoyed this conversation. Thank you, David.
Yep.
I'll see you next time. Bye.
Later.
Thank you for tuning in to Look at My JPEG podcast. If you're listening on Spotify or Apple Podcasts, wherever you get your audio podcast from, give us a like, a subscribe if you like the content, and we'll see you in the next episode. Cheers.